Welcome back to another video on my channel. Today's video is about quite a controversial topic, which is allegations of insider trading by the Federal Reserve. So what is insider trading exactly? The definition of insider trading is in very simple terms trading securities with non-public foreknowledge, also called insider information, and this is illegal. Now, how is this related to the Federal Reserve, which is the central bank of the United States, if you didn't know? It turns out that during the COVID-19 crisis in 2020, multiple Fed officials had been buying and selling stocks at a time when the central bank's policies were implemented. Of course, these guys know everything about the future policies and what effect they will have on asset prices. This sort of asymmetric information is of course unfair, and it is illegal. You can compare it with Elon Musk buying $5 million worth of Dogecoin before tweeting things like this, or this, or this. Anyways, you get the point. Apparently, regional presidents Robert Kaplan of Dallas and Eric Rosengren of Boston had engaged in trading of individual securities in 2020. As a consequence, these sneaky guys are both leaving or retiring earlier than planned. Vice Chairman Clarida and the almighty Fed Chairman Jay Powell were also on the sus list. Jerome Powell sold up to $5 million worth of stock from his personal account on the 1st of October 2020, shortly before the Dow Jones dropped 6%. What a coincidence. Or maybe Powell should offer a new trading course. I'm interested. Of course, when people like you and me or people in corporate life commit insider trading, we get a big fine or even prison sentence. But when Fed officials do it with millions of dollars, they just resign or apologize and it's all good. Now the question is, do these allegations come with no further consequences? Well, no, there are some new rules. I have listed them here. Fed officials can no longer have holdings in shares of particular companies, nor can they invest in individual bonds, hold agency securities, or derivative contracts. Officials will be restricted primarily to owning mutual funds, which they will have to hold for a year and will need permission to buy or sell. The ban includes top policymakers, such as those who sit on the Federal Open Markets Committee, along with senior staff. Officials will have to provide 45 days notice in advance of buying or selling any securities that are still allowed. They cannot buy or sell funds during heightened financial market stress. At last, the central bank will increase the frequency of reporting and public disclosures. Personally, I think the fourth measure is a good restriction, because then there is no room to argue on whether something is classified as insider trading or not. However, I think the first rule and the second rule are too harsh. I think a better solution is to just increase the severity of the punishments. This way you still have your freedom, but you will think twice before you commit insider trading. Now, I think the investigations are still running and we will probably get much more news in the near future. I might make another video by then. But I want to conclude the video with some final thoughts about all of this. I think it is a good thing that even the Federal Reserve gets investigated by a watchdog. Just because these people make the policies and monitor the economy and the commercial banks, it does not automatically mean they are unbiased. It turns out insider trading happens everywhere, even in places where you might not expect it. And although I don't fully agree with the new rules, as I believe it limits freedom in the world even more, I do find it appropriate that these people get punished for what they have done. My advice would be, don't limit people's choices, try to incentivize them not to do it. Thanks for listening. I would like to know your opinion about insider trading, so feel free to comment, like or subscribe, and I'll see you in the next video.